We saw that you guys were in Turkey recently with the board, and obviously, we'd love to know how things are going there.
Yeah, so the board we had a meeting in Turkey a few weeks ago. We brought everyone there to have a grand opening celebration at our new plant. So that has now been fully commissioned and it's running at capacity currently. So we, of course, were stockpiling feedstock during the time the plant was being constructed, and it's running at 15 tons an hour currently. So everything is moving well there, and we expect that project will be basically paid out next year. And so, it's running very well, providing an excellent revenue stream already this year.
Well, I think that seems to be the difference. If I look at some of your uranium peers, because you have a uranium component to this, you're not getting beaten up like they are. So I think people appreciate that model. Because if I read back history, you did get a bit of stick for even thinking about putting that plan together, didn't you?
Yeah, initially there was some people that were wondering about putting a zinc project in with a uranium project. And at the end of the day, we had a shareholders meeting of both companies. We did fairness opinions, valuations, the whole thing. And the shareholders at the end of the day decided, hey, it's a good model. We've got a billion-dollar asset potentially on one side, and we have a cash flowing uranium or a zinc project on the other side. So given the market conditions for uranium right now, it's a great thing to utilize some of that cash flow to move that project ahead.
And just remind me, so what's that going to be worth to you in terms of cash flow once this is up and running and the new plant is paid for?
Well, in 2018, our EBITDA from our old plant, that was a 60,000 ton a year plant, was 13 million our share USD, with about 10 million profit. So this new plant should double that. So we're going from about 30 million pounds of production annually to 60 million pounds annually. And of course, we have a joint venture partner, and we have 49%, they have 51%. So our share, should be double effectively. So 20 million profit annually is expected.
Okay, that's a nice contribution. Okay, like I say, I like this story and I like that model a lot. Let's talk about moving forward. You have talked in the past about how you're going to move the Niger project forward. I know you've been looking at different options, certainly in terms of optimization around the mine plan itself. I mean, how's that going? Are you getting anywhere near some decision?
Yeah, so during 2019, we did a lot of trade-off studies. So we looked at large-scale underground, we looked at large-scale open pit, small-scale open pit. And what we've settled on right now is a very high grade, low capex underground option using a ramp. So we will be doing our feasibility work based on that model. As you may know, and will remind everyone, is that we, with money actually that we generated through our zinc operation, we did about $6 to $8 million worth of drilling and further enhancement of the whole DASA deposit, and really defined an area we call the flank zone. So this flank zone comes to about 40 meters below surface, so near surface, very high grade deposit that is sort of the tip of the whole DASA deposit, but luckily for us, and it comes close to surface. It's easily accessible via a ramp. So we've now laid out a mine plan for that, and we should have more news out towards the end of January, just prior to Indaba, that we can talk about economics at current uranium prices. So, that in association with our MOU we have with Orano, potential trucking options up the road of high grade material, could kick this project off, even in the current situation as far as uranium prices.
Okay, so let me make sure I understand that. So you're saying that the Western Flank has high enough grade ores, obviously you don't know in what quantity, to allow you to kind of get things going at today's spot price? Is that what you're telling me?
That's right. That's
Wow.
right. And
Okay.
actually, we have about 40 million pounds available with that first phase one mining operation.
Right.
So there's a large, effectively deposit sitting there above the entire DASA project, the DASA deposit. So as a phase one, and I don't want to put out any numbers at the moment, but suffice to say that it'll be at least a 10-year mine life in phase one before you get into the main heart of the deposit.
Okay, so and remind me what type of grades were indicatively you're talking about in that Western Flank? Because I know you have some data and you have released some data, but just remind me.
Yeah, it's let's say about an average of 5,000 ppm. So about let's say 10 to 12 pounds per ton.
Okay. Thank you. I'll be doing some maths with that. Okay. That's very meaningful. Okay, I hadn't appreciated that. That's quite exciting. Okay, and so what else? When it comes to January, you're saying before Indaba, you're going to be able to tell us a little bit more around the economics. You talking about a full feasibility there, or is it enhanced PEA? I mean, what are we talking about?
Well, the January report will be like a scoping study or an enhanced
Right.
PEA that we just want to release some numbers to the market. But
Right.
with that base, then we will put all the work together to complete the feasibility in order to submit that to the government.
Got it.
By Q3 in 2020, along with our environmental impact statement. And with that, we will be able to get our mining license.
Okay.
So, we're scheduling to have all of that done during 2020.
That's an accelerated time zone. Okay, a time frame. That's again. That's good news. Okay. 100% appreciated that. Well, I guess we'll wait until pre-Indaba. Maybe we could catch up again just before you head off to South Africa, Cape Town, for that. One last thing, because I appreciate you've got time constraints. Is we've been reading a lot of news about what's going on with companies like Semafo in the West Africa and the Sahel region with ISIS, with IGS, etc. These incursions into Burkina Faso, Benin, Togo, Ghana, even Mali, etc. And that's going to start affecting some of these gold companies in those countries, and some of the governments, are talking in talks with the French and the US and the UN, etc. Is that going to impact you guys at all? Is there any threat of it impacting your business?
Well, obviously it's a concern for investors in West Africa. All of this craziness going on with the terrorism. Niger is a little bit different. So Niger has a very secure border. We also have a number of U.S. military bases in Niger, as well as French military bases. We happen to have in the Timor-Soy Basin, which is located about 1,000 kilometers from any border. So we're right in the center of the country. Most of the activity is happening on the border regions between Burkina, Mali, and Niger. So we're far, far away from that. Mm-hmm. But on top of that, we have these two bases, an American base to the south, a French base to the north. So they're clearly very keen on protecting the uranium operations in the country. So Niger has a very solid association with the West, and they recently joined the UN Security Council. President Issoufou is involved with that, and a lot of Western influence there on a security point of view. So,
Okay.
whereas Mali and Burkina are a little bit more loose, I would say, from a security point of view, Niger's very solid.